It's unfortunate that some high school graduates lack an aura of understanding about what they studied in college and are unable to apply it in their daily lives, making it difficult to perform well in interviews. Whether or not anyone is looking for a job, having a deep knowledge in whatever discipline you study in college will help you stand out and leverage. So many people have been misguided in selecting the best courses in the management sector. It's clear that what we're all afraid of losing our jobs. Haven't we gone to college to study any of the courses or either by passion or recommendation? Accounting, in this context, is a broad aspect of management that will remain profitable in the face of job scarcity. Accounting will not be easily replaced by AI, not even in the next 20 years, because it is a systematic practice that requires human decision and not machines. In this video today, we will enlighten you about everything the accounting career entails, job responsibilities and descriptions, and most importantly, the various lucrative role an accountant will occupy in the management sector. So this is another awesome video you should watch all through to the end. This is Finance Advisor. If you're new here, we welcome you and at the same time, officially invite you to join our adorable fans. Kindly subscribe, click on the notification bell, and don't forget to smash the like and share button. Most importantly, your comment is highly welcome. First, it should be clear that accounting will always be in high demand in any sector, so long as there is inflow or outflow of cash. The role of organizing financial data and analysis must be in demand. Accounting according to American Institute of Certified Public Accountants. Accounting can be defined as the art of recording, classifying, and summarizing in a meaningful manner and in terms of money, transactions, and events of a financial nature, as well as the interpretation of results of such recording and summarization. Here is a detailed explanation of the definition above. The first thing to understand about accounting is that it is an art rather than a science. It is a practical subject that is more concerned with doing things than with theorizing about them. Accounting is the practice of recording, categorizing, and summarizing transactions and events. First and foremost, we keep track of transactions by writing various accounting books such as journals and ledgers, among other things. After the basic records have been appropriately classified into groups, the information provided by the groups is summarized into accounting statements, for example, statements showing the calculation of profit and loss or the financial position of the business. The ultimate goal of keeping and classifying records is frequently the preparation of such summarized financial statements. Another important point to remember is that such records, classifications, and summaries are created for both transactions and events. Any business dealing or activity in which a business unit or a person is involved that results in a change in its financial position is referred to as a transaction. Example is purchase or sale of goods. An event, on the other hand, is an occurrence to which a business unit may or may not be a direct party, but may be impacted by. A currency devaluation is one example. Devaluation usually affects importers and exporters who are not directly involved in the decision to devalue the currency. If an event has a financial impact on a business unit, it must keep a record of it. Again, records, classifications, and summaries are created only for transactions and events of a financial nature or character. Accounting records are all essentially financial records. If a transaction or event has no financial ramifications, it is not recorded in the accounting books. Placing a purchase order, for example, is a transaction, but it has no financial ramifications until the goods are delivered by the supplier to the buyer. Accounting records are only created after the goods have been physically received. As an example, the depreciation of the US dollar may have no financial ramifications for a small trader with no import or export transactions. As a result, no record of the event must be kept in this case. All records are made in a monetary manner. It is critical that these records be kept in a significant, for example, is organized and methodical manner in order to be useful to a business unit. While some businesses keep additional or subsidiary records in terms of quantity, the basic accounting records are all kept in terms of money. For instance, a motor vehicle account will show the value of a motor vehicle owned by a business, rather than its make, mileage, or other characteristics. Similarly, in the purchase account, we only show the monetary value of purchases, not the quantity, type, or other characteristics of the goods purchased. Financial statements must be explained to the appropriate parties so that the contents and message conveyed are understood. As a result, this is an important aspect of the accounting process. Without it, records have little, if any, no value. A variety of tools and techniques are available for interpreting and explaining the accounts. Now, from everything that has been discussed, who can you say is an accountant? Answer is, accountants are in charge of preparing, analyzing, and interpreting financial statements for businesses and/or individuals. And bookkeepers are responsible for recording transactions in a company's general ledger, paying bills, issuing invoices, and/or providing financial reports. A bachelor's degree in accounting from an accredited college or university is required for these financial professionals. Otherwise, they may take a specialized course after high school to learn the fundamentals of accounting. What are the responsibilities of an accountant? Accountants assist businesses in keeping accurate and timely financial records. They are in charge of keeping track of a company's daily transactions and compiling them into financial statements like the balance sheet, income statement, and statement of cash flows. Accountants also perform other services, such as conducting periodic audits or preparing ad hoc management reports. Now let's go through the types of accounting. Accounting for finance. The processes used to generate interim and annual financial statements are referred to as financial accounting. The balance sheet, income statement, and cash flow statement summarize the results of all financial transactions that occur during an accounting period. Accounting for managers. Managerial accounting uses a lot of the same data as financial accounting, but it organizes and uses it differently. In managerial accounting, an accountant creates monthly or quarterly reports that a company's management team can use to make operational decisions. Many other aspects of accounting are included in managerial accounting, such as budgeting, forecasting, and various financial analysis tools. Cost accounting. Just as managerial accounting assists businesses in making management decisions, cost accounting assists businesses in making costing decisions. Cost accounting takes into account all of the costs associated with the production of a product. This data is used by analysts, managers, business owners, and accountants to determine how much their products should cost. Money is viewed as an economic factor of production in cost accounting, whereas money is viewed as a measure of a company's economic performance in financial accounting. What are the accounting skills necessary for an accountant? Accountants, on the other hand, must be able to diagnose and correct subtle errors or discrepancies in a company's accounts, so attention to detail is essential. It is also necessary to be able to think logically in order to solve problems. Math skills are useful, but they are less important than in previous generations due to the widespread availability of computers and calculators. What are the principles used in accounting? Because most businesses use accrual accounting, the accounting principles described are centered on accrual accounting definitions. One is revenue, which is the total amount received from the sale of goods or the provision of services. Transactions are recorded when a service is provided or goods are sold, regardless of when the payment is received. 2. Charge. In accrual accounting, expenses are recorded when they are incurred, according to the expense principle. Company ABC, for example, pays a commission to its salesperson for the order. It records the commission expense on May 1, despite the fact that the salesperson does not receive payment until August 1. 3. Contrast. According to the matching principle, revenue and expenses must be recorded at the same time period in which they occur. 4. Price. According to the cost principle, assets must be recorded on the date they are acquired and for the amount paid for them regardless of whether they change in value over time. For example, despite the fact that medical equipment depreciates over time, the hospital records the value of the purchased medical equipment at the exact price that was paid. 5. Reliability. The fifth accounting principle is objectivity, which means that accounts are supported by evidence such as sales receipts, invoices, purchase orders. The medical equipment manufacturer adheres to the standard of objectivity by keeping copies of sales orders, whereas the hospital adheres to the standard of objectivity by providing receipts for the purchase to its accountant. Accounting is a broad and fascinating area of financial recording that is widely recognized as a valuable profession in any sector. If you decide to study accounting, make sure you develop a passion for calculations because you will have to do a lot of accounting manually from scratch. If you love the effort we put in here to create great content like this, kindly subscribe to this channel and turn on the notification bell to ensure that you are the first to see any new, interesting videos we upload. Until next time, please write us your thoughts about today's video in the comment section below.